Good evening, everyone, and thanks once again for joining on this call. This is Abhishek Mehrotra, Head of Investment Products and Equities with HDFC Securities. And we are delighted to have Mr. Nilesh Shah. I believe he doesn't need any explanation, but still for the audience, Mr. Nilesh Shah is the MD and CEO of Kotak Asset Management Company, and he's a veteran in the market, also an advisor to the PM office on economic things. Yeah. So there is a very, very warm welcome and thanks for taking out time to come over and discuss markets with us.
Thank you, Abhishek bhai. It's my pleasure.
So look, currently where we stand is like we have just come out of a jolt, and there is a little bit of relief rally in last 8 days. Market has regained its mojo, so to say, but there is huge complexity. There's a lot of investors who are sitting on the sidelines. They are clueless, or probably they are finding answers, probably which obviously one of us also may not have. But is it stressing too hard, and what is happening at an investment desk at your level, because you are managing huge funds? How is it going at your level, and how you are going ahead with this markets? First, your views on the market, sir.
So, Abhishek bhai, there are times when you just have to play the ball which comes.
Right.
You don't think about anything else, neither the pitch, nor the weather, nor the asking run rate, nor
Right.
who is there at the opposite end supporting you, how many wickets you have. You just focus on the ball. However it comes, I will play to the best of my ability. This is that time. Do we know anything about President Trump's policy? Answer is clearly no. He has ability to surprise people.
Right.
We could have never guessed America claiming Canada as 51st territory, or asking Denmark to give up Greenland. I mean, clearly he is unpredictable.
Right.
Forget political maneuvers. We would not have predicted even the economical terms, the way he calculated tariff, which was your trade deficit with America divided by your exports to America. I mean, that was never taught in the school. Similarly, we are in a very lucid position post that terrorist event sponsored by Pakistan in Pahalgam.
Right.
India will have to respond. We can't let Pakistan get away every time.
Sure.
So there will be consequences of geopolitical events as well as global events on our market.
Right.
There's no way we will be able to predict either of them. So the focus is clearly right now on understanding the companies in which you have invested, understanding the valuation at which you have invested, and trying to build a portfolio which is likely to outperform market irrespective of what happens globally as well as locally.
Right. Right. But sir, what is the in general guidance? Like, obviously, you have a large team who decides where to invest, where not to invest. Is there a thought that we should hold on funds and let the sky get clear, or it's like keep on playing, because I could see in your fund there's less of cash position, so that clearly defines that you are moving on.
So one thing we have learned over the experience, that cash call is very, very difficult call. India is one of the best fund manager in 2008 beginning was fully invested with the hope that 21,000 Sensex will go to 25,000.
Right.
And he was sitting on 40% cash in October 2008 with the fear that 8,000 Sensex will go to 6,000. The best fund manager went wrong on cash call on both the sides. He was fully invested when he should not have been, and he was sitting in 40% cash when he should not have been.
Right.
Now, if legends can't take cash call, where is the question of ordinary fund managers? My job is very clear. I have to outperform benchmark index.
Right.
How am I proposing to do that? We are buying quality over momentum.
Right.
Right now, in last 10 days, FPIs are buying. They have bought more than 35,000 crore of equity. Now, in this kind of flow, stocks will move up. We are happy to stick with the quality. We don't want to buy those momentum stocks which will rise faster, but who knows what will happen tomorrow. Second focus is on valuation. There are stocks which are rising, but valuations are becoming more and more demanding. There are stocks which are rising, albeit at a slower pace, but valuations are still comfortable. We want to be in comfortable valuation, reasonable valuation stock rather than expensive valuation. Third, there are some stocks where even when bad news come, stocks price doesn't go down. Now, it's a dream of a fund manager that on bad news also stock doesn't go down. Your NAV is protected. But
Right.
Abhishek, by that happens many a times because floating stock is limited and it is controlled by few hands. That is like a chakra view. You can enter at your choice, but the exit is at someone else's choice. We want to avoid that trap. It is far better to explain to a friend like you or
Right.
an investor that, look, I have fallen, but I have fallen less than the index, rather than trying to show that when markets are down, my stocks are up. So this is the time to go for quality over momentum, reasonable valuation over expensive valuation, and high floating stock market driven prices rather than controlled floating stock operator driven prices.
Right. So as you touched upon valuation, there's a lot of news about valuation. I think last 6 months is this most overspoken word in equity markets, and people who didn't knew valuation in last 6 months would have known. I think number of people who have learned valuation has been is different. Now, how do you rate valuation in this current scenario among large cap, mid cap, small caps? And which is the better strategy to play? Because if there is a value everywhere, how one should place his bet?
So, Abhishek, by even in today's market, after all the corrections and volatility,
जी.
there is no value. It is a fair value market. आप 100 रुपए की चीज के लिए 100 रुपए के दाम ही चुका रहे हो सकता है कुछ चीजें 95 में मिल जाए, कुछ चीजें 105 में मिल जाए, बट
जी.
दिस इज नॉट अ बार्गेन मार्केट जहां पे 100 रुपए की चीज 50 रुपए में मिल रही है.
Got it.
Between large, mid, and small, we believe you'll have to create two carve outs. एक export oriented, दूसरा domestic. Now it is quite possible that some export oriented company, let's say for example chemical sector,
जी.
may benefit as China products gets taxed at a higher level and Indian products are welcomed. So even in a slowing global growth economy, you may get a better growth and higher profit because your tariff cost is lower compared to China. But subject to those kind of exception, export-oriented companies will face a slowdown as global growth suffers.
Right.
US is going into recession. Chinese growth will slow down as their key market gets closed. Put together, if 2 out of 3 engines of global growth slows down, there's no price for guessing what happens to the global growth train.
Right.
So export over domestic subject to those exceptions where they are benefiting because of higher tariff on China. The
Right.
second will be companies which are more driven by consumer rather than investment. The rural economy is doing well, monsoon is expected to be good, money is coming in the pockets of consumers thanks to lower interest rates, thanks to income tax cuts proposed by the Honorable Finance Minister in last budget. And eventually, not today, not tomorrow, but day after tomorrow, in maybe between 1.5 years to 2 years, government employees will get 8th pay commission revision. So there is money coming to the pockets of consumers, and hence consumer stocks should do better compared to investment stocks. Within these two parameters of local over export, consumer over infrastructure, we think large cap is a safer space. Mid cap, slightly expensive, but still you can afford to buy some mid caps at reasonable valuation. Small caps, before valuation, focus on quality. There are many small cap companies where valuations are way ahead of fundamentals. Only thing, it's not visible in the numbers because numbers itself are cooked up. So avoid those kind of traps. In small cap, focus on quality, then valuation. In large and mid cap, focus on valuation because most stocks are quality.
Got it. Got it. So you are saying as an investor, there are multiple things which I have taken note of. As an investor, one can look forward for across segments: large cap, mid cap, small cap. Obviously, small cap, the emphasis more should be on quality, and large cap and mid cap, since quality has been there more or less, one can take care of the pricing and the valuation of the entry point. And we also have a fund, Kotak Multicap Fund, which is also a multi-cap strategy. So to our viewers, I'll just tell them, because sir was just saying we have to just see we are beating the benchmark or not. This fund which we are talking about, it's been 3.5 years or so with the fund is launched. Currently, the NAV is 17.5. It started at 10. Obviously, that's how any fund NAV starts. And if I say Nifty, NSE 500 or Nifty 500 as a larger basket, that has grown by 42%, but the fund has grown by 75. So your fund management style has been beating. But way forward, sir, how you are placing the portfolio for an investor who is looking forward for, say, 2 years, 3 years, 5 years down the line. I'll not say 3 months, because I know it is everybody's guess, and we don't want our investors also to participate for 3, 6 months. Then it's better to park in ultra short or a short term fund. So how this fund is placed, and what could an investor think about while investing in this fund in terms of performances?
So multi-cap in some sense is a thali option across market capitalization.
Right.
There's some large cap, some mid cap, some small cap. Minimum 25% is allocated to this three capitalization. So
Right.
दाल भी है, रोटी भी है, भी है, सब्जी भी है.
G.
An additional 25% is flexibility given to fund manager, whether they want to invest in large cap, mid cap, or small cap. So when we are extremely bullish small cap, this fund will have 50% small cap and 25% each in large and mid cap. At current time, I think 48% is large cap and about 50% is between small and mid cap, and
Right.
2% is about cash. So this is large cap right now, but if market gives correction on small and mid cap, we will shift to small and mid cap. This fund is themed towards consumption, as I mentioned before, and
Right.
it is also themed towards domestic entities, as I mentioned before. By default, across the Kotak mutual fund equity schemes, you will have quality over momentum and reasonable valuation over expensive valuation as a underlying theme. This fund is ideal for investors who don't want to take their call on large, mid, and small. The fund manager can take that call.
Right.
Obviously, there will be days when large cap does well, there will be days when small and mid cap does well. We won't be able to capture that on a daily basis. But over cycle, if large caps are cheap and you are overweight large cap, over a period of time, that call will pay off. So this is ideal for investors who wants fund manager to decide how much to invest in large, mid, and small.
Got it. So can you touch more upon how when we create the portfolio, this is the expected, at least there's some benchmark in terms of, at least this should be the ROI of the company when you participate. So what is the earnings growth expectation of the portfolio on a broader basis?
So The first thing for us to invest in a company is its business.
Right.
Any company which over a cycle earns more than the cost of capital deserves our capital. आप
Sure.
12% कमा के 14% चुकाने वाले हैं तो आज नहीं तो कल बैंकरप्ट होंगे. बट अगर आप 14% कमा के 10% दे रहे हो, आज नहीं तो कल आपका शेयर होल्डर पैसा बनाएगा.
Right.
So we want to invest in businesses where cost of capital is lower than the return on capital.
Right.
Now, of course, there are cycles. So we will calculate this ROE on a cyclical basis.
Mm-hmm.
The second thing which we bother about is management.
Right.
I mean, when you go to eat pan in the evening or night, there are many players who can teach Tendulkar how to bet. There are many players who can teach, Ravichandra Ashwin or Ravindra Jadeja how to spin a ball. There are many such people who talk big. But we have to invest with the person who will be able to execute his vision on the ground.
Right.
If a person has a vision but he's not executing it, why will you invest with them?
Mm-hmm.
And most importantly, the person who has vision and execution should also have governance. Otherwise, he will make money. As a shareholder, we will not. So business and management becomes important. And finally, we have to pay value for it. Price is what we pay. Value is what we get.
Right.
What valuation I pay for acquiring businesses is also equally important. At a price, everything is buy. At a price, everything is sell. So we combine business, management, and valuation to build a portfolio with a view to outperform benchmark indices. At this point of time, our expectation is that FY26 earning for Nifty 50 will be roughly about 1100 to 1150 rupee. This is roughly give and take plus or minus 4% a 10% ballpark growth. Now, if I am paying higher PE than that, I need higher earnings growth. Obviously, our PE for multi-cap fund is higher than the benchmark index, and hence our earnings growth should be upwards of 12 to 15% in this fund compared to broad market earnings growth of about 10-12%.
Right. That becomes makes it very interesting because for all our investors, 15% compounding, if something's compounding 15%, I believe it will be within 5 years. Around 5 years, it will double the money. Obviously, the journey goes ups and downs, as Nilesh sir has said. It will keep on moving its way, take the ball as it comes. But sir, what is the role of FII currently in terms of, I'm coming back to the original question in terms of market, because a lot of viewers, in fact, the chat is also on and there are questions on specifically on FII, more money coming in. And there's a lot of news around US going into recession, and probably FII may move away from equity and to a different asset class. Is there a scenario like that? Or they will leave US or developed markets and then look forward to India as one of the option in the emerging space?
So if we look at FPIs, in October 24, the trade was something like this. Rupee was trading at 83, 84. थोड़ा गिरता हुआ दिखता था, maybe it will go to 86, 87. Nifty was trading at 26,000. There was expectation that there's a 10-15% correction possible because our valuations were high. US market was trading lower, and there was hope that President Trump will give income tax cut, earnings will go up, and hence market will rise. So you had very strong incentive to sell Indian equity because you will make money on equity as well as currency, and buy American equity as you make money on both equity and currency. October, November, December, Jan, Feb, March, we saw selling. December, there was probably a little bit of buying, but overall between October to March 25, there was large selling by FPIs.
Right.
Now, what is the situation? Rupee is appreciating, markets had become cheaper, and US markets were correcting with currency falling like a storm. What was the scenario for going out of India suddenly became a scenario for going out of America. First time in the month of March 25, we saw passive FPI turning to be a buyer. They bought couple of $100 million in March. April, again, they were buyer. And now what we hear in the month of May, that foreigners are again buying both active as well as passive. Put together, my feeling is that FPIs are realizing that it is best to buy India when bad news are there, because when there is good news, you'll have to pay a heavy price. अभिषेक भाई 2-3 महीने पहले किसी ने पूछा था कि भाई एफपीआई क्या करेंगे, तो मैंने कहा कि सुबह का भूला शाम को घर लौट आएगा. अब एफपीआई की ये बिहेवियर देख के कहना पड़ता है कि सुबह का भूला दोपहर को ही घर लौट आया.
Right.
But please remember, on the debt side, we have seen the highest ever outflows post our inclusion in JP Morgan bond index. So ऐसा नहीं है कि FPIs can't take money out. Today, when 10-year India yield is somewhere around 635, 640, and 10-year US yield is around 420, it makes sense for people to buy US Treasury rather than Indian Treasury. So
Right.
FPIs are also calculative animals. They are taking call based on long-term growth potential and potential return. But my feeling is that during correction, FPI is likely to be a buyer rather than seller. During bad news, also, there will be some FPIs who will believe it is time to buy India when there is bad news, because when there is good news, stocks will not be available at these prices.
True, true. Sir, look, we are in a scenario, since we've been very closely monitoring from the equity participation side also, a lot of clients currently are, as in the current state, ki, they have frozen in terms of कि ना नया पैसा डालना है और जो पुराना पैसा पड़ा है, let it continue the way it is, and they are sitting on cash, and this is a scenario for last couple of months now. And since obviously this entire journey for way forward for next 3-4 months is also not very clear, is it, will the market go upside, be sideways, or may go downwards? So what should they do now? Or if they're sitting on cash, should they hold on? Because holding on cash, as you said, you don't tell your fund managers to hold on cash, but as an investor, what should they do in terms of when they should come up with a thought कि चलो अभी participate करते हैं? What news will trigger that? Or there is no such news to trigger that?
So Abhishek bhai, suppose if you are betting
जी
and सामने वाले बॉलर ने एक जबरदस्त बाउंसर फेंका,
जी
आप हक्के बक्के रह गए, बट किसी भी तरह से आपके सर के ऊपर से गुजर गया.
जी
नाउ नेक्स्ट बॉल कम्स एंड यू डिसाइड मैं जैसे खड़ा था वैसे ही खड़ा रहूंगा, बिकॉज पहले अच्छे बाउंसर में भी मेरी जान बच गई.
जी
तो ये तो कैसे चलेगा? हो सकता है कि दूसरा बॉल यॉर्कर है, सीधे आपके पांव की तरफ आ रहा है,
जी
पांव हटाना बहुत जरूरी है. हो सकता है कि नया बॉल हाफ वॉली है और बल्ला जोर से घुमाने की जरूरत है, खड़े रहेंगे तो वो अपॉर्चुनिटी मिस हो जाएगी.
राइट
इसलिए फर्स्ट टाइम आई से लेट्स प्ले द बॉल ऑन इट्स मेरिट. टुडे
राइट
देयर आर सो मेनी मूविंग पार्ट्स. Corporate results of March 25 quarter are not up to expectation.
राइट
Trump tariff policy will create its own volatility.
राइट
Oil prices have come down, which is beneficial to India, but they can bounce back because of OPEC cartelization.
राइट
India's own growth story will get impacted depending upon how we manage conflict with Pakistan. Undoubtedly, there is public pressure to teach a lesson to Pakistan. Put together with all these moving parts, we can't take a position. We have to play each delivery on its merit. If you wait for certainty to emerge, opportunities will be lost. It is important for us to play the ball on its merit. If you have cash, follow the dharma of asset allocation. If there is correction and valuation is becoming cheaper, keep on buying. If you are worried for global uncertainty, buy domestic. If you are having too much exposure in small and mid cap, please buy large cap. But use this correction as an opportunity to build your equity portfolio. At the same time, अगर मार्केट भाग रही है तो थोड़ा प्रॉफिट बुक करने में भी कोई गलत बात नहीं है. If you are over invested in equity, if you are over invested in an expensive stock, it's time to take some profit out.
So, sir, that's very rightly said. In fact, best performing markets and most uncertainties, they don't go hand in hand.
Yes.
जितनी uncertainty, उतना ही probably chances of profit or higher returns from the markets goes up. So on the same lines, we have now a new set of investors who have probably the window or savings have gone up because of the new tax norms, and thanks to the finance ministry on that. So what will be your advice to them? They should, because we have a lot of clients who are first time investors now and looking at this kind of a confusing market and a lot of uncertainty over a long period of time. Should they start with an SIP? Obviously these are young people between 25 to 30, around that's the age. Should they immediately start? Don't think about anything?
Abhishek bhai, there's no one standard size solution. People have to take their call. But my general request will be that many a times young people feel that let me spend money, I will start savings later on. फिर वो later on होता रहता है. And by the time you wake up for savings, it might be too late.
Right.
As they say, you have to discipline your mind.
Right.
So, first principle which your users should remember, income minus expenses equal to savings is not the right way of saving. Income minus savings equal to expenses is the right way of spending. Build the habit of saving. Saving alone is not good enough, because if you keep money in cash at home, over a period of time, inflation will destroy its purchasing power. Right. So you have to invest. Invest with a view to generate above inflation return. If you start early and compound in real return, your financial security is given. When there is higher savings, don't forget to do top up. With higher savings, you should spend some money, enjoy life, but at the same time, you should also increase savings so that there is enough capital available to achieve your financial goals.
Very right, sir. In fact, for all the investors who are thinking about investing now, and if you don't have a very short-term goal to fulfill and financially, please look at long-term and the asset class which we are discussing, equities. Beyond 7 years, I think there is 84, 90% probability that you will manage to get more than 10% returns, even with such uncertainty and probably more uncertainty, because the world has seen more. Nilesh sir has seen more than this. And in fact, this doesn't fear him the way it would have feared him, or probably there would have been double thoughts during the time of COVID, or there has been many higher, bigger calamities before. But this will still be passed on because that's how the time moves. And if we are investing in a portfolio, which Nilesh just talked about, which is expected to have 15% earnings growth companies, relatively in long term, this is what you can expect in terms of performance, obviously plus minus here and there. And there is a 15 ka funda also, sir, which somebody was just sharing with me. If you invest 15,000 rupees for 15 years and at 15% compounding, you are definite to make 1 crore. So that 15 ka funda also holds good. So this is about investors who are already who are new to the market. They should participate, and obviously there are multiple platforms who can give them calculator and more news about how they should spread. And if somebody is investing first time probably, and they have a long period to fulfill their financial goals, uh, equities can a higher equity exposure can also look, but definitely based on their risk asset class. So there are set of investors who have invested into equities or small caps, and they're waiting for the time where the small cap will come up, and then they'll rejig the portfolio. I have spoken to a couple of clients who are very fairly exposed to small and mid cap, which could be good and bad mix, but they are waiting for the time ki exit ka time hame time karna hai. So what's your view on them?
So first, it's difficult to time the market. For example, this is my favorite example. The greatest batsman of the world is Sachin Tendulkar. 51 centuries, 15,921 runs, 54 average. Everything is spectacular. Sachin Tendulkar strike rate was 54. That means for every 100 ball he faced, he scored 54 runs. Now with his talent, capability, commitment, he should have ideally scored 600 runs per 100 balls. हर बॉल पे छक्का मारना चाहिए भाई, आपके पास तो इतनी कैपेबिलिटीज थी. But no, he played every ball on its merit. Some he hit for 4, some for 6, some he just played for no run, saving wicket. And by scoring 54 runs per 100 ball, he still scored 15,921 runs and 51 centuries. Bang opposite of him is Shahid Afridi. वो बॉल आने से पहले बल्ला घुमा देते थे. His strike rate is one of the highest in the test cricket at some 83 or 87 runs per 100 balls. But कुल मिला के रन कितने किए? 1600-1700.
True.
So पिच पे खड़े रहे तेंदुलकर तो 15,921 रन बने. पिच पे सिर्फ आप हवाबाजी करने गए तो स्ट्राइक रेट बन गया, रन नहीं बने. So please remember, it's difficult to time the market. It is important to stay in the market so that you can make money and compound your wealth.
Sure, sir. In fact, I'm getting a lot of questions. Few questions are stock specific. I'm avoiding that. So broadly, this question comes every time whenever we have a discussion. You have already told us that you are looking forward, or probably in your portfolios, there are more inclination toward domestic and on those companies which are which will be export beneficiary because of whatever is happening globally. But apart from domestic and consumption, which you have just said, people are looking forward for your views on especially banking, because banking there is people are seeing shifts in terms of how people bank, and because financial companies are also impacting. Or then second is on the IT sector. If you
On the banking side, Abhishek bhai, we have seen RBI pumping up liquidity. 4 लाख करोड़ का OMO कर दिया है, $25 बिलियन का बाई सेल स्वैप किया है, और 1,25,000 करोड़ का OMO अनाउंस किया है. What all this liquidity will do is to bring down cost of borrowing. It will bring down the deposit cost. Repo already 6% पे है, and it is expected to go further down over next 12-18 months. More importantly, operating rate is already 575 instead of 6 because there is more liquidity. The LAF balance, the interbank liquidity is about 1 lakh crore, and the entire systematic liquidity, including government balance, is 2,50,000 crore. So one, cost of borrowing will come down and availability of funds for deposit will go up. On the other side, NPA cycle is under control. Lending rates are reasonable. Spreads are reasonable. Most importantly, valuations are still attractive. Banking stock in last 2-3 years went down as FPIs were selling. If they come to buy, no price for guessing where the prices will go. So we remain bullish banking and financial services as we believe volume growth will come and the margins will be protected. On the IT side, there are worries. One, they are mainly servicing American market, global markets, and वहां पे order आने में थोड़ी बहुत देरी तो होगी. In today's uncertain environment, which company would like to take quick decisions? They'll all be happy to defer it by 2-6 months. So your sales volume growth as well as realization will get impacted. The second challenge is coming from the artificial intelligence side. Today, you see many people designing a game, writing a program, creating a product very quickly using artificial intelligence. Now, if AI starts developing code, what will happen to IT companies? Their bargaining power will come down and also the business. IT stocks are aware about this concerns and they have corrected. On a dividend yield basis, they are one of the highest dividend yield stocks. My request will be that be very, very selective in IT company. You only want to invest in those IT companies who are at the cutting edge of AI, who are leveraging AI to deliver faster, cheaper, better solution to their customers. If you are stuck in the past, you are going to get finished. But if you are investing for the future, then certainly there will be enough opportunity. जब कंप्यूटर आए तो टाइपिस्ट के जॉब चले गए, बट जिन्होंने कंप्यूटर कैसे चलाते हैं वो सीख लिया, they all benefited and their pay went up. It is the same thing with artificial intelligence. If you are in awe of it and don't master it, you will become like dinosaur extinct. But if you can leverage AI to deliver better, cheaper, faster solutions to your customers, you will do very well.
Right, right. So I'll tell you, almost a month back, we have Mr. Janki Raman, CIO of Franklin. He was here and he said worst is behind us. And 21,282 was the bottom of Nifty, which was formed in last some time back. And from there, we are 3,000 ahead. What we want to hear from you, are we, the worst is behind us, or was that the bottom? Because people definitely do chase. I know that's a very tricky question, you will, but we want to hear from you. What is your views? Is the worst behind us?
So Abhishek, by President Trump's policy and Indo-Pak situation, it will be difficult for me to say worst is behind us.
Right.
But all I can recommend that if the worst comes to us, that will be greatest opportunity to buy. During COVID time, Abhishek bhai, worst was in front of us.
Right.
घर में छुप के बैठे थे, जान का भरोसा नहीं था, डर का माहौल था,
जी.
Uncertainty आज से भी ज्यादा थी.
For sure.
And yet that was the best opportunity to buy. Could I tell you that 7,500 was the bottom? Answer is no. हम तो 10,000 निफ्टी पे भी बोले थोड़ा ओवरवेट करिए, 9,000 निफ्टी पे भी बोले थोड़ा ओवरवेट करिए, 8,000 निफ्टी पे गुस्सा आ गया तो बोला कि घर बार बेच के अब निफ्टी खरीद लीजिए, डबल घर बनेगा. Ideally we should have never made that statement, because उसके बाद मार्केट 7,500 गया था. 7,500 पे किसी ने पूछा नहीं क्या करने का. जब रिबाउंड आया तब वापस 8,000 पे बोला कि भाई निफ्टी खरीदिए.
जी.
तो it is very, very difficult to say 7,500 was the bottom in COVID-19.
Right.
But it was easier to say that at this levels of market where valuations are 10 times, 12 times forward earning, it is time to buy. I will use the same approach. If things deteriorate, prices come down, valuations become cheaper, our long-term growth story continues to remain as strong as it was before, and hence every correction is an opportunity to buy. I wouldn't put all my money at one go in equity in view of uncertainty. I will
Right.
put it on a gradual basis. SIP करते रहिए, STP कर लीजिए, but I will invest on a gradual basis.
So in a scenario, if as an investor, if somebody is sitting on 100 rupees, you will say go in for 20, 30 right now?
If you are
20,
sitting on
30%.
100,
100% for
it is
equity as an
cash.
asset class. Yes.
It is cash to be invested. My
Right.
recommendation will be that you take a 6-month view. There is enough uncertainty. Make it 12 installments and थोड़ा थोड़ा धीरे धीरे लगाते रहिए. As valuations become more and more cheaper, then you have to start putting aggressively. If valuations remain expensive, then धीरे धीरे लगाते रहिए. But
Right.
this is time to be equal weight equity, not overweight equity. Market is fairly valued. It is not a cheap market like COVID.
And not underweight equity also, sir.
Don't be underweight equity by a big margin.
Right.
थोड़ा बहुत इधर उधर कर सकते हैं, because our long-term growth story remains intact. And FPI seems to be now convinced that in the bad news you have to buy India, because in the good news nothing will be available.
Sure. So with 3 to 5 year horizon, is this the right time to buy?
Undoubtedly, when you have money, that is the best time to buy. बगैर पैसे तो कहाँ खरीदेंगे?
जी.
But please follow asset allocation.
Definitely.
Many a times what happens, Abhishek, by people, because of their position, end up losing their conviction. If you are heavily leveraged, you are in a quality stock, but when prices drop and margin call starts coming, you are bound to react negatively. Many a times, markets have run up, but you were sitting on cash waiting for correction, and you were rational while market was becoming irrational. Finally, लोग पेशेंस छोड़ देते हैं, रैशनैलिटी भूल जाते हैं और जंप मार देते हैं कि नहीं नहीं अब तो मार्केट ऊपर ही जाएगा. So what is most important is to maintain your asset allocation, maintain your discipline.
Great, right, sir. I think this is a very learning session for all the viewers and for us also. To all the viewers, I think I'll quickly summarize, and what I've learned over this session is, first of all, fund management team at Kotak and most of the fund houses, they are primarily looking forward for what they are into as in terms of stocks. They are analyzing stocks, they are seeing profitability, they are seeing the businesses. And obviously, yes, they have a view on the global market, but since they don't have a control, I think the broader objective is let us pick up the best horses, which will run long. That is the broader objective, rather than counting on something which is beyond the ability to talk about or do something which is, say, India, Pakistan, or what is there in the on the Trump side. But yes, as an investor, one should, if he is in terms of asset allocation, if you believe you are under penetrated, you can look at equities. If you are fairly penetrated, and whatever incremental funds allocations you have to do, you should start participating. Over the long run, yes, the market has given good returns. We have seen very bad uncertain times. This is relatively less, but yes, uncertain times give the best returns. That has proven over the past. Continue investing for long term. Short term, yes, there could be volatility. There's nobody denying it. Worst is behind us. Is also something which we believe, but it can also come in future because things are fluid at this time. And the more uncertainty, there's more opportunity. That is how we like to say. And most importantly, multicap as a strategy, with Kotak Asset Multicap Fund. It's a 3.5 year old fund. 17 rupees is the NAV. It is available on the platform. It is recommended from HDFC Securities. This is our own research also. Obviously, there has been a research from the fund managers, but we, as a distributor, also do various analysis in terms of identifying the fund. That's why for each category, we have 3, 4 funds available for investors. We don't just open the box. We try to use our brains also to suggest what is right. And we believe it's a good opportunity. it's a good scheme or good fund to allocate funds to. How much you have to allocate is purely dependent on your asset class and your liquidity and your expectation of returns and need of returns over the period of time. I have already given 15 wala funda, but definitely the fund diversifies your money into large cap, mid cap, and small cap, and looking at opportunities across these sectors. That's the work which is fund managers are best, and that's what they are doing for this fund. And the past has been good. I not say don't see the past returns, but we believe the future will also be great. Nilesh sir, any last comments before we end up this?
So just one advice, Abhishek bhai, many a times people say कि यार short-term volatility is painful. 10 रुपया लगाया, 8 रुपया हो गया, 7 रुपया हो गया. We earn our money with a lot of hard work, and when it disappears like this, it is very, very painful.
Right.
Undoubtedly, it is painful to lose money. But without pain, there is no gain.
Right.
Long back, I had gone to some place to give a lecture. Then there was question answer session. And one very elderly gentleman, started saying that stock market is gambling. And I have told Prime Minister, Finance Minister not to invest in stock market, stop stock market gambling, speculation, blah, blah, blah. Since there was no question, I didn't answer him. And then once the question answer session ended, I came down and there was a gentleman coming to me somewhere in his mid-50s and said, Nilesh bhai, I'm sorry, my father was rambling over there about stock market as a gambling and so on and so forth. And I said, yeah, I didn't understand that old gentleman. He's quite old. Why did he even come if he believes stock market is gambling? I mean, if you don't want to drink, why go to the bar? If you don't want to drink milk, why come to the restaurant? So he says, no, Nilesh bhai, it is not like this. We are all staying in a chawl. And our neighbors, by their investment, trading, whatever you call in stock market, have made money and moved out. My father never invested in stock market. And obviously, we are still staying in chawl. And for him, it's very difficult to accept that he was on the wrong side. So he's now blaming the whole world, stock market as a gambling thing, so that he can justify to himself that I remaining poor and others moving ahead is appropriate. Now, that is far more painful. When you have to pretend to yourself that what you have done is right in front of your relatives, that will be far more painful. What respect a son will have to the father. Now, imagine if we avoid investing during bad times, during bad days. You are never going to gain the fruits of good days. So stay invested, take the short-term pain. Undoubtedly, it will be there because of all this uncertainty. But if you follow the dharma of asset allocation, you will finally achieve your financial freedom.
Definitely, sir. It is very rightly put. In fact, I don't have better words to explain the way you have briefed. So, all the investors, please note, yes, there is a pain, but when you are thinking about 3 years, 5 years, or more, because the future is beyond 3, 5 years. I don't know why we restrict to 3, 5 years. It's 10 years, 20 years, and we have seen a lot of funds, NAVs going from 10 to 1,000. And it's a no-brainer. You give your funds to the right people, right portfolio managers, and your money will go across most of the AMCs. That is the scenario. They put their best brains behind to make your money grow. And thanks, sir. That was really very insightful, and thanks for your time. We'll close the call. We have overshooted the time, but thanks a ton, sir.
Thank you. Thank you, Abhishek. Bye. Bye.
Thanks all the investors who have joined the call. Thanks a lot.